The market has had a few bumps in the road recently, and in this video we'll be discussing that as well as my plan going forward. Let's jump right in. Let's take a look at the recent performance of the S&P 500. From peak to recent bottom, it's down a little bit more than 5%. You'll also notice that on its way down, it's had a few days where it snapped back suddenly. In a strong market downtrend or crash, we would call these days a dead cat bounce. What this means essentially is that when the market is descending, it doesn't go down every single day. There's going to be a few days where there's a little bit of a pullback and it can kind of give you false hope that things are going to continue upward. But it continues going down, which is why we call it a dead cat bounce. This is one of the many reasons why it's so difficult to predict and plan for a market crash. And when we're in that type of environment, it also makes it super difficult to predict when we're actually going to hit the bottom. Along the way down, we've likely hit many dead cat bounces, but sooner or later, one of these quote-unquote dead cat bounces is actually going to be the day that things start to turn around. So what's going to happen going forward? Are we going to continue downtrending and experience some sort of market crash or maybe even a correction of greater than 10%? The only thing that I'm 100% sure of is that I have no idea. And if you think that we're going to be experiencing a market correction or worse, then you better put your money where your mouth is and start selling out of your positions so that you can get back in at lower prices. But as we all know, this is a lot easier said than done, and when we look back on history, it's easy to say with hindsight that we knew the market crash was coming. But when we're in the moment, it's impossible to tell what's going to happen. With all of that out of the way, let's get into my plan going forward. I currently have 3 positions that I plan to add to, and all 3 of these companies are, in my opinion, at very attractive valuations. I plan to add to them based upon which ones are best priced. So if between now and when I'm able to purchase, one stock goes up and one stock goes down, I'm probably going to add more to the one that goes down. The 3 companies that I'm referring to are Corsair Gaming, Micron, and GoPro. I also have a number of stocks on my watch list and will consider adding a new position if it seems like the right thing to do. If you clicked on this video thinking I had some secret sauce for how to handle the current market's conditions, I'm sorry to inform you I don't. I usually like to keep things very simple, and right now is no different. It's time to buy stocks, and in fact, it's almost always time to buy stocks. I only ever buy companies when I think that they're undervalued at their current prices, and I like to tune out all the other noise and fear-mongering. China issues, foreign relation problems, inflation, there is always something to worry about, but this has never stopped the stock market from going up over the decades. I'm not saying that we can't let present circumstances inform our decision making, but we shouldn't allow it to stop us dead in our tracks and prevent us from making smart decisions. A lot of times when we get caught up in all of this, we end up making emotional decisions that we'll end up regretting later on. Keep marching forward, keep buying stocks, and don't sell out of panic. Make buy and sell decisions using your brain and not your stomach, and good luck to all of you. Let's finish this video with a portfolio review. I have many short option positions that are expiring on October 15th, so I'm going to discuss my plan with these and if I plan to sell any options on the same security in the next monthly expiration cycle. First up, we have Corsair Gaming. I have 11 short call contracts at the $35 strike, and these are all far out of the money, so I'm just going to let these expire to get the last few pennies out of this one and hope that the share price goes up a little bit so that when I sell my calls expiring November 19th, I'll be able to collect a little bit more credit. I also sold one put option at the $25 strike, and if the share price were to happen to plummet going into Friday, I would allow this one to get assigned because I'll be happy to purchase 100 shares at $25. Moving right along, I've got Dropbox 34 strike calls sold for contracts. I sold this option quite a while ago, and this one is also far out of the money, so I plan to let this one expire as well. I'm going to continue selling covered calls on Dropbox and collect even more premium, and I do not have any plans to sell my position in Dropbox anytime soon. Next up, we've got GoPro. I have 2 calls sold at the $9.50 strike. These will expire worthless, and I do plan to continue selling covered calls on this one. I had 2 put options that I sold at the $9 strike, but I rolled one of them from the October 15th cycle into the November 19th cycle. Same strike, $9 put, but I did not want to risk getting assigned on 2 contracts, which is why I rolled one of them into the November 19 cycle. I'm probably going to let this other one go until expiration, and if it does expire in the money, I'll gladly purchase 100 shares of GoPro at $9, especially since it was already my plan to pick up 100 shares this month. I've got one Micron 8250 strike call expiring as well. Once it expires, I plan to continue selling more covered calls. I'll probably have to be a little bit conservative with the strike price that I choose just because Micron might jump here just because of how low it's gone recently. I don't usually predict short-term price movements, but I do think there is a chance that could happen with this one, so I don't want to get in trouble by selling a call with too low of a strike price. I've got 2 Smile Direct Club calls that are expiring, and I don't plan to sell another covered call on this one right away. I do want to see if there's another spike or short squeeze that happens, because if that does happen, there's also going to be a jump in implied volatility, which means that premiums will go up and it will be a good time to sell another set of covered calls at that time. I plan to let my Smile Direct Club puts expire. I'll also be letting my Smile Direct Club $5 strike put options expire. Smile Direct Club's premiums have been very high, and I've been making quite a bit of money selling options on both the call and put side with this one. Finally, we've got some Tattooed Chef $35 strike call options and $17.50 put options that will be expiring. As you can see here, I made a massive profit on these Tattooed Chef 35 strike calls. I sold them when implied volatility went through the roof, when there was a bit of a short squeeze scare, and when Wall Street bets kind of took hold of the stock. I kind of figured that it was short-term nonsense, so I took advantage of it by getting a lot of premium by selling options on this one. I'll let this expire, and I may or may not continue selling calls on Tattooed Chef going forward. I'm very bullish on this one long-term, and I have no idea when the stock price is going to move big, so I will not be selling calls on Tattooed Chef indefinitely just because I want exposure to the upside with this stock. That'll do it for this one. The portfolio is sitting at about $76,000. Thanks for tuning in. If you've made it this far in the video, thank you so much for watching. Don't forget to like the video, comment down below, and consider subscribing. Until that next one, peace.